Hey, what's going on, guys? And welcome back to my channel. Today, I want to talk about a few tips on how to get the most out of stock trading, which I don't see a lot of people doing, especially, more amateur investors. I'd like to think that a lot of people watching this video are already aware of these tips, but just in case you're not, I'm going to go ahead and just say them. So, tip number one is to consistently fund your accounts without even thinking about it. So set up some automatic deposits, whether they're weekly. On M1 Finance, you can do daily deposits. If you're not doing daily deposits on M1 Finance, you're not taking full advantage of M1 Finance, to be honest. And what I would do is if you work a 9 to 5, or if you work some kind of hourly paid job, or whether it's salary or whatever, um, at the very least, you should be investing 1 hour's wage. So if you work 8 hours a day and you do daily deposits, you should invest one of those hours' wages. So if you make $8 an hour, then invest $8 an hour. Or if you make 20 an hour, invest 20 an hour. At the very least, I think that's what you should be doing. And I think that's like a pretty common theme among books like The Richest Man in Babylon, which like I think is more like 1/10 of what you earn. But this way, when you pay yourself first, in that sense, 1 divided by 8 is actually a little more than 10%. It's actually 12.5%. But you don't even think about it, like in that sense, if you're putting your money in like an S&P 500 index fund, then you're not really getting paid that hourly salary. You're getting paid a little more than that. What I mean by that is like, let's say you're making $8 an hour, but every single day, one of those $8 is working for you a ton. Then at the end of the day, you're not making $8 an hour times 8 hours. You're making a little more than that. And the more that you invest, the more that you're making every single day. Think about where the majority of wealth is in this country, and it's usually in investments, whether it's real estate or the stock market. And the stock market is accessible by so many people, and a lot of times it's free to invest if we're talking about Robinhood or M1 financing. But I think it's just a bigger common theme to like go where the money is. It's kind of a messed up country in the sense that the CEO makes like, at least 20 times as much as like an hourly worker. I think it's probably like closer to 100 times or something. Because these companies care about making their price go up. So they don't care about their wages. They're actually gonna do whatever it takes to make people invest more money into their company. So they're gonna do those share buybacks and things like that. So companies care more about their share price and how much money they're making instead of their people. That's not news. But we can take full advantage of it, if you're empowered with the knowledge to do so. So that's tip number one, is to invest 1 hour's worth of wages every single day. Tip number two is consider swing trading. So I actually have both. I do M1 Finance long-term investing, and I do Robinhood swing trading. Guess where I make most of my money? It's definitely going to be in the Robinhood type of investing, because ultimately, if you're just doing buy and hold, you're only going to be as good as the underlying stock or index. If that stock goes up 8%, you're only going to be as good as 8%. Unless, of course, like you're doing weekly deposits and you invest when it's down or something like that. But for the most part, that's pretty accurate. Whereas if you're swing trading, if you're able to predict a couple moves, like if the stock goes down 3% and then it recovers and you're able to capitalize on that, you can crush that 8%. Obviously, though, you have to be good enough to do it. So there is some kind of balance there. Let's say you think the stock is going down, so you sell, but it actually jumps up like 5%. That's kind of a missed opportunity. So if you guys are aware of how to time the market, I think swing trading is just like so much better than just buy and hold. And tip number three is to buy what everyone else is buying, or at least dedicating some amount of your portfolio to those very, very popular stocks. Why does a stock price go up? Is it A, because it's a good company? Is it B, because they have good values? Actually, I can't think of any other hypothetical situations, but I don't think stocks go up because they're good companies or because of anything they do internally. I think stocks go up because people put their money into that stock. So by a lot of metrics, there may be some stocks that are way overvalued, but their stock price continues to go up. In the same standard, there are a lot of stocks that are actually really well valued, but their stock price continues to go down or kind of struggles because literally people are either putting their money into it or they're not. It's that simple. Let's not try to complicate it. So if we think about some of the larger companies, let's say the top 20 in the S&P 500, those companies are going to be found in a lot of other index funds. So, you want those companies that have a lot of, 401k investments or that have a lot of hedge fund investments, things like that. And you guys you know exactly the type of companies that I'm talking about. We're talking Microsoft, Google, Amazon, potentially Netflix, but more like Johnson & Johnson and Procter and Gamble and things like that. Don't sleep on these companies. There's $1 million hedge funds and $1 million investments going into it. So, take that consideration as well. That's kind of free money in that sense. But anyway, that's going to be it for this video. I hope you guys learned something, and let me know any other tips that you think I missed that aren't so popular. But anyway, that's going to be it for this. I hope you have a great day and good luck trading.